Hi, my name's Steve Walker from Promise Money, and if you're wondering what's happening with interest rates and products in the commercial market right now, and I'm talking about the end of September 2022 when everything's going bonkers, I'm going to tell you. So firstly, I think you can rest assured that the lenders are not reacting in the same way that the residential mortgages lenders are doing, because they're not pulling all of their products and the criteria is staying generally the same. So we haven't got that same full-scale panic, but where we've got a massive issue is in fixed rates, because all the lenders are worried to death about the fixed rates and where they're going to go. So fixed rates have gone up a lot. In some cases, one lender has cancelled everything on a fixed rate, saying we're not doing fixed rates anymore at all, but they're in the minority. Most lenders are still doing fixed rates, but they have gone up. To give you an example, beginning of August, we would have probably been talking about fixed rates of 5.99 for 5 years as a typical sort of rate. Those have gone up to 7.99. But I would say it's amongst the high street lenders where it's even worse, because they were offering much lower fixed rates and they're looking further out to the future, and their fixed rates are as high as the tier 2 and tier 3 lenders. So the high street are very nervous about fixed rates. Variable rates, they're still okay. There's still some great deals. I'm looking at a case at the moment we're looking to complete, which is 2.3 above base. So that's still a great deal. It's just that base has gone up. But there's a lot of turmoil, and the impact of this is that with rates going up as they are, that's having an impact on affordability. For those applications where affordability is tight, particularly on investment properties, because lots of landlords say, well, look, we want the maximum amount we can get. The rental yields now, which would have supported a higher level of borrowing because the rates have gone up, are now supporting a lower rate of borrowing. So that is an issue. So I guess the key thing here is lenders are still lending. There's a bit of volatility which is coming through at the moment in terms of fixed rates. I think that some lenders are going to move up further because they haven't yet reacted to what happened recently with regards to the mini budget and what's going on currently in the market and the concerns over the pound. So they haven't yet reacted to that. So there's some lenders who are yet to move, but still lending. That's good. Rates are higher, so you might currently, whereas you may have 2 months ago been thinking let's get into a fixed rate, you might now be thinking actually let's get into a variable rate, because how much higher are they going to go, and might we be better off going with a variable rate and the hope that they come back down again. So there's a little bit of scaremongering around. If you've got any queries, do get in touch anyway, and certainly check out our other videos on YouTube. Do subscribe to our channel, and talk to you again soon. Thanks a lot. Bye bye.